Now you're in loud and clear, Theo.
How are you doing? How is your afternoon going?
I'm going well. It's been a good morning. It's been a good morning trading. How about yourself?
Yeah. Oh, fantastic. Did you start getting some sun over there?
Finally, just a sliver,
Okay.
Not as much as you, there.
All righty. Interesting webinar. Another interesting webinar today, the part 2, intraday price action and trading. Is everyone, even a few days ago on the live trading webinar, I've been asked, can you explain us how to trade intraday? Because I do only weekly analysis and I execute on daily chart, but yeah, it is a little bit different. So I'm sure everyone will find a lot of value out of this webinar, and those who miss it, they're going to watch it on the YouTube later on.
Absolutely. Yep. No, absolutely. There's I think this will be like a kind of little 3 or 4 part within a series, focusing on price action, but in the intraday environment, because there are subtle nuances between, trading weekly charts and trading intraday. And so hopefully this will just help those who want to try price action on an intraday basis and help them improve and give them the best opportunity to do well trading in that environment.
I'm sure they are on the best webinar.
I like to think so.
All right. I wish you best luck.
Super. Thank you. Super. Good afternoon, everybody. Thank you for the introduction, Theo. I hope that you can all hear me. I hope that you can all see me loud and clear there for our session this afternoon. Okay, next one in our price action series. And we're going to be talking about combining price action and intraday trading. And as you may have just heard me say there with Theo, I think we'll do maybe about 4 parts of this over the next sort of 6 to 8 weeks, because it's fascinating in terms of the price action element, but also combining it into intraday trading, which I know lots of traders will have enthusiasm and interest for. It would be interesting to know, of those of you joining us here today, how many of you are actually engaged in intraday trading? Is it something that makes up all of your trading sort of efforts, or is it something that you're interested in, but have been perhaps waiting to get a little educated about how you would look to join them? So, as I said, just let us know in the chat box there if you're watching that. Also, as always, as I always say every week, I appreciate that we have a wide range of traders who come here and join us. Some from complete beginners to people who've been trading for a good while. You're all welcome here. There'll be something for everybody in this session. And I also recognize that even though these are the English-speaking webinars, we have a truly global audience. So wherever you are in the world, it's great to have you here with us, and we look forward to you joining us through our sessions here. So here we are, Admirals, a broker with global presence and local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products, and giving the opportunity to engage with markets, both the MT4 and MT5 platform. If you have any questions about Admirals, please get in touch with your account representative, and they'll be very happy to help guide you. So, what are we talking about today? Well, not unsurprisingly, it's the price action series. So we always touch a little bit about our price action. We always talk a little bit about the sort of the routine that we want to help you embed with your own trading. We'll do a little bit of a recap of part 1. We did that session. Must be about a couple of months ago. Okay, so the good thing is that you'll find that these sessions are all recorded and they're all sat there on the Admirals YouTube channel. So be sure to subscribe and you can watch it there. We'll talk a few more elements of price action intraday trading and how best to utilize it in the intraday environment. As I said, this will probably be about 4, perhaps 5 sessions within sessions where we are combining price action and intraday trading. Okay, so we'll add another little bit today, and then in a few weeks' time we'll add more bits. Okay, and I'll be sharing some of my own experiences. For those of you who don't know me, my name's Paul. I've traded for many years. Okay, traded for funds, traded for clients. I tend to focus on FX, indices, and commodities. But realistically, everything that I share with you, trading-wise, in terms of concepts, ideas, tactics, they are, I like them to be agnostic in terms of they will work across all instruments and all time frames. I tend to be a trend trader for my longer term trades, and I tend to be a reversal trader for shorter term intraday trading. So just pick up on that if you haven't watched part one, or if you have, even if you have, just recognise that that's going to come into play with what we talk about in a few slides' time. So, yeah, I think we've been running the price action guide now long enough that most people recognize what we're doing in terms of just giving new traders the sort of, let's say, almost like the foundation, the kind of the basic language to be able to understand and analyze markets using purely price action, few candlesticks at its most basic. You might add elements to it, but that's at its most basic elements. And so each Wednesday, we're trying to just build upon the previous session so you're a little bit educated and informed how you can use price action in your own trading endeavors. As I said, we've covered quite a lot here, as you can see. We're up to session 44, right? And what I say every week is that I try to cover hard skills, soft skills, all right? Hard skills are the setups, the tactics that everybody likes to see. Things like engulfing candles, star formations, pin bars, inside bars, but also the soft skills, which new traders may not recognize the value of, but I assure you, the longer you trade, the more you'll realize these are definitely important. So things like having good routines, building it in checklists, okay, and managing risk, all of these elements which are really crucial, that actually hopefully together go the hard and soft skills. These are what basically help you, develop your best trading self. And I always have a couple of slides in on, our overall routines that we have, and we'll expand this next week when we look at risk management. Again, what we always have is a very, very simple routine for price action, because part of it is about just ensuring that you're doing best practice right from the word go. So whenever you open a chart, all right, whatever it is, gold, Bitcoin, euro, it doesn't matter. Step one is draw in those levels of support and resistance. Start at the monthly, down to the weekly, down to the daily, okay? Just draw those levels in. We don't, as new traders, you don't want to be buying into resistance or selling into support. You want to know where those levels are. Step two is to find if there is a trend. Good trends will leap off the chart at you, okay? You don't need to force it. You don't need to chase it, all right? The challenge we have is that markets probably only trend really about 20 to 30% of the time. But if they are trending, well, we want the opportunity to be able to sort of buy at pullbacks in an uptrend and sell at resistance, sell rallies in a downtrend. Hence, which leads us to step three is we're looking to see how price reacts at those key significant support and resistance levels. It might be the levels you've drawn in at step one. It might be things like big round numbers, which will also play a part today in intraday trading. It might be things like dynamic support and resistance from some of the moving averages that we have on our charts. Because what we're looking for is at those significant levels at step four, look to see, do we get any price action triggers? All right, things like pin bars, engulfing candles, inside bars, star formations, key reversals. And also just take a step back for step five. Is it part of a bigger chart pattern? Is it part of maybe a flag pattern, or are we running into a double top, etc.? Just sometimes, when new traders, they get very excited. They just want to focus on that simple pattern. But sometimes we need to be able to sort of just see the wood for the trees. So these are the step fives. And there's another five, okay, which we have touched on some of our previous sessions, but we'll do more of that next week. But if you're doing these things, it's about embedding the right habits, the right behaviors. It's making sure you're doing the right thing day after day after day. And what we've done is we've covered throughout this series, we've covered, different asset classes. We've covered FX, okay? We've covered indices, we've covered all those commodities, equities, and the cryptos, all of which are available on the Admirals platform for you to trade. As I said, it's quite a broad net to begin with, but as I always say, what you tend to find is that, as traders go in and you start to acquire data on your own trading, you'll start to find that normally kind of starts to sort of narrow itself down to somewhere between about 2 to 6 pairs for most traders. And that's absolutely fine. You start wide and then sort of narrow it. So there you go. All right. We always do a little bit of intro. I always want to basically just reinforce the best practices that we can do. And, but really, as I said, today we're going to be talking about price action and intraday trading. And, when we've talked about intraday trading in the past, people want to know, is it possible to be able to do it just using price action? And the truth is, yes, it is. But like any trading, any style of intraday trading, you do need to be prepared, because it's important to know when the relevant big news announcements are being made. Okay, that becomes really crucial to understand, because that volatility, reduced volatility into those markets, and that can be a double-edged sword, really. So if you remember in part one, of those of you who joined us, all right, we introduced the idea that it's time to grow from thinking just like a trader and start to think about the other people who are operating in markets. Time to start maybe thinking how a dealer or a market maker would be particularly operating. And so today's session, we're going to build upon it, all right, start using some of the price action tools and techniques that are available with the Admirals platforms, and sort of just, reinforcing and refining our sort of setups and tactics we talked about, to effectively just sort of help us just take another step in our ability to be able to combine price action and intraday trading. And as I said, we'll probably maybe do 4 or 5 sessions in total just on intraday trading, because I know it is it's a popular topic, and there's lots for me to be able to cover and share with you from my own trading endeavors. So as I said, I think in the previous session, is that from my own personal experience, all right, of trading through on an intraday basis, there are times of the year that effectively tends to favor one asset class over another, right? So you'll go through periods where intraday trading FX is better than equities or indices, fixed income and crypto. Sometimes it's very clear, okay? Sometimes it's very clear where the energy is, okay? Where the order flow has basically come to. Sometimes it's very clear, and you can see that just by doing simple analysis and understanding and seeing where we see, good, strong, fast moves. Other times it will not be, all right? And I wish I could give you a very quick, simple rule of thumb, all right? Rule about how, FX tends to be better in April than indices, etc. But if I'm honest, I haven't personally found it. I've found that there are periods of that. As I said, sometimes it's very clear, other times it's not. But today, what we're going to do is focus again is mostly on FX pairs. What I teach is useful for everything, but some of the later sessions we'll do, the 4th and 5th session on intraday trading, what I'll do is I'll introduce the nuances for things like trading indices and commodities, but we will focus mostly on FX, because what I want to do is to make sure that you're doing the right things, okay, to begin with, because that becomes crucially important. But we'll discover that more in a few slides' time. So, we've talked a little bit about the kind of overall price action, routine we've discussed, but it is important to have a right pre-market routine, all right? Well, for any trading, but really intraday trading, okay? When intraday trading financial markets, it's important that you have a pre-market routine that you're able to follow. And there's a very simple one that can become a lot more detailed, a lot more specific. But to begin with, just, as you hear me saying earlier, just make sure you're identifying significant levels, all right, on the monthly, the weekly, and the daily charts. People might say, well, why bother, Paul? We're intraday trading, who cares? But the thing is those levels will be significant, all right? And as an intraday trader, as I say, you don't want to be buying into resistance or selling into support at the start of your trading journey. Now, there are some institutional traders who love that and want to do that, right? And that's absolutely fine, but that is not you. All right. So, make sure you understand where those significant levels are. We're looking for price action triggers, which we'll talk about in a few slides' time. When things are happening fast on an intraday market, it's sometimes very popular for people to just basically see let's say a pin bar starting to form, and they just get in. All right. Make sure that you don't enter the trade until that candle is complete. And then my suggestion to begin with is wait until price breaks the sort of the high or the low of that candle based upon what we're looking to achieve. Make sure that you're never risking more than 1% per trade, and position size accordingly. It might actually be much less than that to begin with. And targeting wise, well, you're looking for about 2-to-1 reward to risk, or the next significant level. But ideally, what you want to be doing is having asymmetric reward. Okay, if you're going to risk €100, you want to have the ability to generate €150 or more. Okay, not be risking €100 for €10, which is what sometimes people think that's what how they should operate on an intraday basis. Trust me, you should not. And importantly, as you've heard me talk about lots of time, be sure to keep good records and make sure you review them, because that is the quickest way for you to learn. Okay, it's the quickest way to identify, sort of edges that you'll be able to utilize in your own trading. Once you've got into that good routine, just making sure you rinse and repeat. Every day's a school day. All right, when it comes to trading, especially intraday trading. And one sort of additional elements, and it might be, seen maybe thinking that I'm kind of, leaving the point is just that, just make sure that you have some proper rules and expectations for intraday trading. Risk management is absolutely key. Things can happen fast, things can change fast. So it's important that you manage risk, okay? Absolutely honor it. Know what news is coming out for that session. Know if there's any major news coming out, okay? That is unbelievably important. I suggest is that you conduct your analysis before you start trading, okay? Lots of people intraday trading, they just open the charts and they just go in, and as they're going through, they analyze it. My suggestion is do your analysis first, all right? Maybe the night before, okay? Maybe the session before, okay? Just looking at resist the temptation to trade out of session. What I mean by that is, just use a little bit of common sense, okay? If it's, I'm here in Western Europe, but if it's midnight, okay, midnight here in Europe, and I'm trying to trade euro against sterling, the reality is it's not going to move that much on an intraday basis because the vast majority of the traders, the Europeans and the British, they're firmly tucked up in the beds. So just use a bit of common sense and avoid the temptation to trade intraday out of session. It might sound like the most simple basic element, but make sure you've got a good internet connection. All right. Sometimes we take that for granted these days, but you want to have a good internet connection with a backup if you're going to be engaging in intraday, and ensure you're rested and prepared for the session. If you've had a late night, if you've been out partying with friends, okay, if you've been up enjoying the evening with your partner or arguing with your partner, either way, right, all of these things have an influence upon your trading in the next day. So make sure that you're rested and prepared for the session. So, I always go through those when I talk about intraday trading, because I think it's just really important to be able to ensure that traders have, they have a good handle on this, because it's not about picking one good trade. It is about, how do I bring myself to the market and how do I perform at my best, trade after trade after trade after trade. That is what we're actually looking for, and that's what I'm always very keen to basically get across to you, ladies and gentlemen. So let's just do a quick recap. If you remember, part one, we talked about, understanding, who the dealers are. Some people might call them market makers. Some people might even think of them as nothing but algos these days. But, if we think about it in terms of the dealer's motto is that they understand market moves are rarely one way, and dealers understand that the majority of the time, intraday markets are range bound. So around about 80% of the time, intraday markets may well be range bound. And think about that. On a normal trading week, that might be 4 days out of 5. Now, it doesn't always, it's not always as clean as that. You might have a week of trending markets because there's a bigger picture unfolding. But as a rule of thumb, all right, intraday markets are generally range bound there around 80% of the time. So that's one of the dealers' mottos, and they know this. Also, they know to never trust the first price. After a news release, dealers know that the first price print is very often, it's the knee-jerk reaction of the market, okay? And those, maybe uneducated traders, and it is very often wrong. And with that in mind, many dealers are always what they call ABF, always be fading, all right? They are fading the moves, and more of that will come into play as we have a little look at sort of markets for what's been going on and what's been happening today. So that's what we talked a great deal more about in part one. If you want a reminder, as I said, all of these videos are on the Admirals YouTube channel, so be sure to follow. So yeah, what did we learn from that? Okay, and we talked about how dealers, they only make money when orders are triggered. That is sometimes things people forget. Okay, dealers only make money when orders are triggered, so they will always bully price towards where the biggest number of orders are. And then we start to get an interest in this. Well, where would those biggest number of orders be? Where are those orders floating? Because that's where likelihood price is likely to go. And so in the last session, we covered a good bit of where those orders may be set in terms of previous days, highs and lows, previous weeks, highs and lows, even previous months, previous years. But what it means is, thinking like a dealer means that we change our way of operating from when we're swing trading or longer term trading. As I said at the start in my own bio, my longer term trading, my swing trading, I tend to be a trend follower. Okay, I like to find a good trend and look to surf it. But as an intraday trader, when I've operated funds as an intraday trader, primarily I'm a mean reversion trader. I'm a reversal trader. I'm expecting price to come out of its little range and then come back into its range more often than not. And if it provides me with the price action trigger, well then That's me. Okay, I'm in. All right, and we're gonna look at that more in a moment. So as I said, one of the things we did look at, all right, in the previous session, and we'll quickly recap, is utilizing the highs and lows. All right, highs and lows become very, very useful. Markets are still traded by humans, right? There might be an awful lot of execution by algo, but even those algos are executing traders' ideas. But certainly here, there's still lots that are traded by humans, and humans will look at normal, usual places for them to do their business. So this can be things like big round numbers. Whether you love them or you loathe them, the reality is big round numbers, they do have an impact still on markets. So they can be, well worth being aware of. And also previous highs and lows. So previous highs and lows are tradable opportunities, especially on an intraday basis. So it could be the previous session's high and low. All right, as we go from like the Asian session to the London session to the New York session, it could be the previous day in terms of what happened, it could be the previous week. And even some people look at previous months and previous years, depending upon their kind of their timeline. But definitely previous session, previous days, previous weeks, highs and lows, they are very, very useful. Okay, they are very important to know, and they present us with opportunities, and that's all we can ask for. So, the reason they are of interest, let's just bring up the old drawing tool here, ladies and gentlemen, is they are tradable and they're interesting because there are usually lots of stops there. Remember what I was just saying there a few slides ago. Dealers, they only get paid when orders get triggered. So they are always looking to bully price towards where the biggest pools of those stops will be. Very often it is the other side of previous highs and lows. So for example, in this particular area, you might not be able to see it there, but having gone up one day, all right, start of the day, it came right back into the range. The next day here, it traded beneath the previous day's lows, right? Picked up a lot of the orders, reversed, and then you can see what actually happened for the next for the remainder of the session into the US session. So those areas, being able to identify them is because they're attractive areas for dealers. It offers us points for a reversal trade, a mean reversion trade, and that's what we've been looking at. We'll look at a few ideas through that. So this is why, as I said, previous sessions, previous highs, days highs and lows, previous weeks highs and lows, they become very useful to us as a space for us to do business as an intraday trader. So if you remember, what we talked about in the previous session was that every day is an intraday FX trader. You want to know what, if any, major news is being released. I keep reinforcing that. There's no excuse. Okay, there is an economic calendar on the Admirals website that you can utilize. There are other ones around there. You can get all sorts of help and assistance in that. So there's no excuse not to know when there's big news coming out. Look for the previous days, highs and lows. Okay, previous sessions, it might be previous days, previous weeks. And also just be aware of any significant big round numbers. So on one of the sterling pairs this morning, okay, that was a bit of a player, which we'll look at in a moment. And it is when price reaches those areas, okay, it reaches those areas of previous days highs and lows, all right, previous sessions highs and lows, all right, then what we're looking for is a reversal setup, a mean reversion setup. Okay, so things that we've looked at, things like pin bars, rejection candles, all right, engulfing candles, all right, this is what we're looking for. Key reversal, again, one of my own particular favorites, or double top or bottoms, or even star formations. Okay, that's a star formation. And in the last session we focused on mostly double tops and bottoms, and we're just going to look at that and develop that, and we'll look at some of the other ones, bringing in these other ones. And if you are, as I said, new to trading and not really sure what pin bars, engulfing candles, key reversals, star formations, double tops and bottoms are, then, as I said, go back to the Admirals YouTube channel. You'll find all the videos that are there. There are ones on each one of those individually. So take a bit of time, just go through it. Just make sure that you're very clear with that, because once you can identify these setups, it's where it's the context where we see this pattern. All right, the context, and that context is prices moved towards an area where it may reverse. Prices moved to a previous session high and low, previous day high and low, previous week high and low. That's the context. And when we get the pattern, then we get the trade. Right, you get the context, the pattern, and then the trade. Right, keep it nice and a nice and simple a process order flow. So, we talked about double tops and bottoms, okay, and I was just maybe a little bit glib, but saying that if you need a permanent reminder of what double top and bottom is, well, you've got one on your left palm there, okay, you can see it there. And I also talked about thinking of it like like a rugby scrum, all right, namely that for those of you, and I appreciate rugby might not necessarily be everybody's sport, but when you see a rugby scrum from above, it's about really the ball gets pushed in. The two teams fight, and then invariably the ball gets pinged out. And in trading, when we're getting at an area where there's a double top or bottom, price is getting fought over before it gets pinged out. All right, and because we have an idea of where it's happening, we understand the context, where we're ready to anticipate the likely direction of a reversal, and that gives us a little edge that we can actually work with to trade intraday wise. But and you'll hear this all the time about me, that word, you'll hear me talking about it all the time. Ideally, what we're looking for is a confluence of events, all right? Some patterns and signals, when seen in combination, that is when they provide higher probability setups. And as a trader, that's all you can really ever ask for, okay? That, you have an opportunity for a higher probability setup, all right? So, that's why you need to understand understand those price action setups, those patterns that we've talked about, things like pin bars, engulfing candles, key reversal candles, star formations, double top or bottoms, the context, okay, the location. Did it happen at a previous session high or low, previous day high or low? Was it happening maybe a big round number? Might be, and that's what we'll talk a little bit about today, is the timing, okay? Is it because price has tried to break out of the Asian session and come back in? And that's what we're going to talk a little bit more about today. Or could you use indicators like the average true range, which is, we'll talk about that in a future session in terms of how to use that with price action generally, but also intraday. So let's have a little look more at a few more details. So when it comes to the intraday trading, all right, where should we focus our efforts? All right, where should we really look at to basically, to make the most of our time, energy, and resources? So what I normally would suggest is time one, okay? And what I mean by time one is that let's begin with the time scales that we'll focus on. So I generally normally suggest that the 30-minute 1 hour chart is what you should be using for your analysis or identifying of trends and setups. Lots of people like the 1 hour chart. I personally these days prefer the kind of 30-minute, but there's not massive amounts between them, okay? There's not massive amounts between them, all right? The idea is that we're just looking at to give us an idea if there is a particular trend, or if there's any particular price action that is setting up on that. And then generally, you're looking for the 5 or the 15-minute chart for execution. Yes, there's lots of people who can trade down on the 5-minute and the 1-minute chart, but my normal suggestion to traders new to intraday trading is take your time, all right? Slowly step your way down. There's lots of traders who like to just basically sort of jump to the 1-minute chart and try and trade that because they've watched a few YouTube clips. The reality is that, it's like you jumping out of your normal everyday car and jumping into a Formula One car, okay? You might think it's the same. Well, it's got, a steering wheel, 4 wheels and an engine and a few pedals. But the reality is it's a completely different experience because everything's happening faster. And if you're not used to being able to operate at that kind of intensity, the likelihood of it going wrong increases. So, as I say, just step your way down. Take your time. Markets ain't going anywhere. They'll still be here. Okay, they were here before we were all born. They'll be here long after we're gone. All right. So you can take time, you can work at it and just step your way down and find people are very comfortable operating at the 1-minute chart, or the people are comfortable operating at the 30-minute or maybe the 1 hour. It's fine. We have to find out what particular area works on. And also in terms of, to begin with, what we're going to focus on is we'll focus on the European session, which as a general rule, okay, is between around about 700 to 1000 London time. You might be there a little bit earlier to do your prep. You might be there a little bit later, okay, because maybe the trade is just taking its time to develop. But as a general rule, to begin with today, ladies and gentlemen, that's what I suggest. And I do appreciate we have a global audience, and I do appreciate that, that basically, there's people who join us from, from all continents of the world. But I'm going to suggest today to focus on that kind of European session between about 0700 to 1000 London time as a starting point. And I'm going to say focus on sort of three of the major FX pairs. Now, for me, that would be sterling, euro, and the US dollar. All right, I've got sterling and euro, which are my kind of, let's say, my natural time zone, and equally the US dollar. Well, the US dollar is it's the big daddy of the FX business. So you always want to understand what that's doing. Okay, whether it's trending, whether it's consolidating, whether it's asleep, whether it's it's angry and moving. Okay, you want to understand that. I recognize that if you're joining us from Australia or maybe South Africa or Brazil or west coast of the US, etc. That what you focus on in terms of your FX pairs may change a little bit, okay, but definitely, all right, US dollar you want to be focusing on. Then maybe the ones that are the major ones, okay, that are close to your time location, okay. I know lots of traders in America like to try and trade the European session, and I see and read and hear about traders getting up at like 2 o'clock in the morning, 3 o'clock in the morning to trade the European Open because they're on maybe on the US time or on the North American continent. That's okay, but you have to realize, you have to think, is that a truly sustainable business? Okay, that you start work at 3 o'clock in the morning. Now, there are some people who might say they love that, but generally, most humans, we have our circadian rhythms, okay, and that's a period where we're normally asleep and resting. So, I said I put there the sort of the time zones and the kind of timelines and what I focus on. Just take a little bit of common sense to apply it to where you are in the world if you're joining us, from the four corners of the world. So one of the reasons, as I said, is that looking at the kind of at that period there, is that what we have is for me it's really very good. Yes, you could include the Swiss franc in there, okay, but reality is the US dollar. The US dollar is busy all the time, but then I've also got sterling and euro, and to a lesser extent the Swiss franc as well. So it's the London session. The London session is still the most important one for for the FX world. It is still one of the major global financial capitals, but also FX capital as well in particular. So, I'm fortunate in that sense. But as I said, just to adapt it to where you are, where you find yourself in the world as well. So when I look to come and focus my efforts as well, as I said, I have, when we've looked at my charts, I tend to have profiles set up for the currencies that I would particularly focus on. So for, my sterling profile, how I have it set up, you can see I've got it, the pound against the US dollar, euro against the sterling, pound Aussie, pound against the Canadian dollar, pound against the yen, pound against the Swiss franc, pound against the Kiwi dollar, and also the FTSE, which is, the UK index. So I have my chart set up like that because the reason I have that is because I can very quickly start to get an idea of strength and weakness, and if there's correlation. Ideally, what I'd like to be seeing is, I'd like to be seeing, charts all in a nice trend together. But sometimes you don't get that. Okay, sometimes you don't get that, and so you have to very quickly synthesize and understand where the strength and weakness is and what I'm looking to do. Sometimes it's very clear. Other times it can be very messy. If it's very messy, it probably means that you probably shouldn't try and trade it that day. That's what we want to. Well, there's no need for you to try and be a hero. Okay, wait for the conditions to suit you rather than trying to wade in. And I have that the same for my euro pairs as well. Okay, I've got euro against US dollar, euro sterling, euro against the Aussie, euro against the Canadian dollar, euro against the yen, euro against the Swiss franc, euro against the Kiwi dollar, and the DAX. Okay, which is the European, the German main index there. So I have them all there. As I said, sometimes it can be quite clear. If there's a particular trend in place. All right. So in that particular case, you can see on some of those, like the DAX and some of those European pairs, there were some really nice trends there. And this is what gave us, it gave me a couple of opportunities there earlier this morning on the the euro against the Oz and the euro against the New Zealand dollar. And unfortunately, I missed the euro against the Canadian dollar, even though it was a kind of a perfect move for me. But there you go, woulda, coulda, shoulda. All right, you can't capture all of the trades every day. Okay, what we're looking for is which are the ones that work and make sense to you and meet your rules. And also, as I said, I've got an element on the US dollar. All right, Aussie against the dollar, euro against the dollar, pound against the dollar, dollar against the Swiss franc, Kiwi dollar against the US dollar, dollar against the Canadian dollar, dollar against the yen, and the dollar index, which is something that you want to make sure that you have up and you're able to sort of follow there as the you know, if you're going to be trading FX, and certainly if you're going to be trading, you know, the dollar. So it's the same. So I have those profiles up that I can move between and start to look, you know, for the particular setups that I am interested in. And really, what I'm looking at, and I think I spoke about this last time, is that you know, remember what I was saying: previous days highs, previous days lows. What I have here is, you know, I have an indicator there that is available to. It's not a specific one. It's a, you know, free one. You're readily able to find. It's called iSessions. It's out there, and you're able to set that so that it basically will. Sorry, this is the iSessions. Is that my previous days highs, previous weeks highs and lows, and you can do that, and you can see that it draws in there. What I use the iSessions for is I have it there to basically to draw in my overnight Asian sessions. Hopefully you can see that there. So remember what I was saying is that price on an intraday basis, very often, it reverts to the mean. And so it's when price pushes out to the previous highs and lows of the previous session, previous day, previous week, that those are all areas and levels that I can be of interest to. And so in that particular case there, you know, that was a very tight overnight session there. That was the Asian session there, very tight. Price pushes out of it, and then it pushes down, goes the other side, and then basically it just, you know, in the afternoon we get more kind of volatility. And it's the same here, that was the next day, that actually we pushed down, and what did we put in there? We put in a double bottom there, a double bottom at the previous, at the previous sessions low, the Asian session low, before price rallied up. And that's what we're starting to look for. And as I said, we're kind of interested in, let's clear this, interested in, you know, this period, of really of the day. That's what I'm looking for, between about 7 and 11 London time. Price to sort of come out of the Asian session, to remember to find an area, and it could have been the previous week high, you know, or here it's, you know, you can see it's you know, the yesterday's highs pushed through it, but it'll come back into it. And what we're looking for is, you know, I'm looking for the price action at the right time and place to give me the best opportunity. So it's the context being that price is pushing out, of the Asian session when I'm trading the European session, and that what we also see is that invariably we push out of the Asian session. Invariably, as I said, price tends to mean revert. 80% of the time, price basically, you know, it remains sideways for the vast majority of the intraday market. Days we get really good strong trends. You might get days, you might get weeks, you might even get months, but a lot of the time that is what we see, is that it's primarily sort of range bound, and that is what we're utilizing to our advantage. So just more examples here, and there's the pound against the Canadian dollar. Hopefully you can see the overnight. The overnight session was just basically quite contained, just going sideways, not really doing anything of exciting. It's coming into the London session, you know, it's just drifting down. But then what happens is price breaks out. Price breaks out of that, the Asian session. And where does it go? It actually goes to the previous week's low. And what does it do when it gets there? Well, then, you know, it basically prints here a real nice double bottom. But there's your opportunity to trade back into the range. And where does it go? It goes back up to this level, which I suspect was probably the previous day's high. And there, that trade there is, you know, that is a very nice London session FX trade. I know, I appreciate a lot of people say, well, you could have caught that. Well, yes, could have, you know, but it's woulda, coulda, shoulda. You know, I'm not trying to capture every piece of the run. What I'm happy to do is to take my piece, make sure that I have a good asymmetric reward to risk ratio, right? So namely, you know, whatever I'm risking, whatever my trade risk is, I want to be 1.5 to 2 to 2.5, right, to 1. Normally about 1.5 to 2.5 is where I tend to find most of my trades kind of intraday trades kind of settle in between that kind of zone, but it's still asymmetric reward to risk, right? And that is what we're particularly looking for. That's what we're particularly working on. This morning, on the euro against the Aussies, the 15-minute chart. So quite a big range for euro Aussie overnight in Asia. You know, for those of you who are trading the Asian session, a lot of people might have just traded that kind of bounce off the 50 period moving average. But, you know, I come into the London session. What does the price do? price pops up out of it, and then it basically comes back, and then it tries to set up again, doesn't it? And now what we've got here is, and this is the trade for me, is that we've got a double top. Okay, there's a double top, an M formation trade there that also has the second leg of it. Is a rejection candle in itself. So I've got combinations here. I have effectively, what's going on is that prices making a false breakout of the Asian session. It is creating a double top that also has the second leg of it is a rejection candle in its own right. There'll be lots of people. Let me clear this. There'll be lots of people who would probably just look to trade that pin bar rejection candle anyway. But because it's like as a double top, well, then invariably it's just giving us more. It's giving us absolutely much more confluence, right? A confluence that the trade is likely to go away. And what we actually had was, we traded back to the 50 period moving average. And what we can see is that price, it bounced off it earlier. And very often when you get a good distance, the trade back to the 50 period moving average is a very nice target. Okay. That is invariably an opportunity to take that trade, to generate asymmetric reward to risk. Okay. And you're just waiting for, the context, the pattern, right, the trade. That's it. Not trying to be a rock star. Okay, it's just finding simple trades like this that occur day after day after day. There'll always be one. All right, there will always be one. Okay, and it's just basically just doing your good analysis, watching it, understanding those price action candlesticks, those price action patterns like double tops. Okay, and being able to recognize that there is the space for it to maneuver. And this was another one from myself from this morning. Okay, this was the euro against the New Zealand dollar on the 15-minute chart. Once again, we had a big range, okay, like the Aussie ranges. But what I was interested in was invariably, not only did we have the highs here, okay, of the overall Asian session, we also had a big round number there. Okay, 18000, 180. I remember saying big round numbers. Markets still like them, okay? Traders still like them. And what we had was, we had a pop out, okay? And then we basically came back and then we pushed up here to make, once again, another double top there. And what I liked was that, the kind of second leg, there's lots of wicks, isn't there? There's lots of rejection candles. They're maybe not as strong or as pretty as the rejection candle that we saw in that Euro Aussie, but it's still valid. And what I've got is I'm seeing this on, I think it was on Euro Yen, on Euro Aussie, on Euro Sterling, on Euro New Zealand dollar. We're seeing that happen across a lot of those euro pairs. So clearly, having had a good overnight session, price was, there was profit taking, there was a reversion to the mean, and invariably the trade back down to that 50 period moving average was a kind of just a very nice, simple trade setup. Some people might say, well, Paul, there was a double bottom there. And yes, that's absolutely right. Okay. And, that's, you'd have seen that, I would have been happy. But really, all I'm looking to do, as I said, is just to capture that piece. Okay. The price is overextended, and it's likely to revert to the mean because most of the time price on an intraday basis is range bound. So when it gets to the edges, if it puts in the price action, then it's likely to come back in towards the middle, and that's my trade. Okay, that's my trade. Quite simple, quite there's a nice kind of poetry to it. When it works well, it just basically pops out, sets up the pattern, it comes back in. And as I said, you'll normally find there's at least one trade a day, and that is actually all you really need. Okay, there was quite a few setups this morning, a couple of nice setups there. Not only did the Euro Aussie set up, but the Pound Aussie as well. But ultimately, as a new trader, you're only looking for one, for one trade a day. In that morning session, that's enough to keep you making progress. So here's your task from today's session. We've got, we're a little running a little bit late, but we'll go across the live charts. All right. After the webinar, start to create profiles on your MT4, your MT5 platforms. Okay, start to look at the major currency pairs. So for me, it's sterling, euro, USD. For yourself, if you're in Australia, well, the likelihood is that Australia is not going to be one of them. Perhaps the Japanese yen, but the US dollar should be in there as well. All right. So wherever you are in the world, just adapt to what your local conditions are, and then just go away. Sort of just open up your charts on intraday time scales. Okay, if you don't have the ability to plug in a previous day's previous days and weeks highs and lows indicator, which is out there, and and you can be found quite easily. Just draw forward, okay, on the 60-minute chart. Just draw forward the previous day's highs and lows, draw in any significant big round numbers, and look and see what happens when price comes out of the Asian session into the European session, and goes towards those areas. All right, what actually happens? Does price power on through, in which case you're probably getting a trending day, or does price print a pattern because it's giving an indication that it's likely to revert back into the middle? All right, because if it does, that might provide you with an opportunity, ladies and gentlemen. All right, we've got a little price action. You can have a pattern, you could have a candlestick, okay, that's giving you the ability to combine price action, but trading kind of the intraday, certainly in this case, intraday London session. And as I said, we'll do more sessions, okay, and I'll look at indices, okay, for sort of trading the afternoon session. But all of these like sort of sessions that we will do a little bit more on just combining the price action in the intraday, how you do it, how you go about it, how you make it happen. But each week we just want to just put a little bit more in. So to conclude, ladies and gentlemen, all right, intraday trading FX markets with price action, it is possible. Just a bit of preparation, a bit of forethought. 80% of the time, intraday FX markets are practically range bound, okay? There won't be massive difference. So to begin with, I suggest maybe focus on just the 50 and the 60 minutes, okay? Just use the 60 minute just to do a bit of analysis on, 15 minute for your execution. Look at it. For me, as I said, I look for just like the £3, euro, and US dollar. It may differ based upon where you are in the world. And watch to see how does price react around previous days highs and lows, the sort of after it's broken out of the Asian session. Look, does it basically give you an opportunity for a reversal or a mean reversion setup? Is the stuff like a double top or bottom there, okay? Or is there an engulfing candle or a key reversal candle, things like that can give you an indication that price is going to revert back into the mean, because that's what gives us an opportunity. So we'll look at the charts, okay, just for a couple of moments, but just remember that our next session will be Wednesday, 9th of August. And as I said, we're going to talk a little bit about risk management, all right? Why is it important? How can we improve it? What are the kind of rules we need to do in our risk management, all right? And, it doesn't matter how great your setups are. If you're not managing risk, your trading career will probably be short and painful, right? It's as simple as that. So be sure to join us there next Wednesday at 2 p.m. London time. And if you want to contact us, you can do. You'll get a feedback form after this. Just give us your thoughts. If there's topics you'd like to see me cover in future ones, this is your opportunity to let us know. We'll try and build that in. So I hope you found that useful. We've got just a minute or two, and we'll just have a quick look at the charts and what we're setting up with today. So just bear with me a moment, and we'll switch across to the Admirals platform. Okay, so okay, so here we go. I'm on the Active Trades platform, and I'm on the British pound here. Okay, so as I was saying this morning, I showed just a couple of the euro was and the euro kiwi from today, but actually one of the things is that gave me confidence was that there was correlation across the Aussie pairs, correlation across the euro pairs, and a little bit of correlation across the pound against the Aussie in the same way it was the euro against the Aussie price, actually, as you can probably see here. Price this morning, overnight, price came up. It came out of the Asian session there. This level is the actually previous month's high. Okay, that dotted gold on is a previous month's high. Price pushed up through the Asian session, and then what does it print here? This is, that's an evening star formation, okay, which we've talked about before, and you can find it on the YouTube channel. But when I break that down, okay, looking at the 15-minute chart, then there is a reversal of that with pin bars on there, okay, and more. Here you go. And there's actually also sort of double tops there, okay, that I wouldn't expect new traders to be able to recognize, but you shouldn't have to if you can even just identify on that 30-minute chart that there we are, and you can see for yourself. It's been a bit of a slow session, but it has actually just rolled its way over. It's working its way back down to, where's it working? The 50, and that's why I have the 50 period moving average. That's why I have it kind of quite bold, because I find it, in terms of trading mean reversion, it can be very often very useful there. Yesterday did the same, popped up and then put a pin bar in at the previous day's highs, and it moved its way down, all right, but actually then it just went sideways. Okay, so it came down a good few pips, but it didn't follow through, and that's what we're looking for. What we're really looking for is for it to roll over and move its way down there, and when it does, that's great. When it starts to go sideways after having been there for a couple of hours, that's when I'm stepping aside anyway. Okay, but this morning that actually worked quite nicely on that. Euro against the sterling. Okay, euro against the sterling came out of it here. All right, we can see the Asian session there, came out of it there, and what did it print there? Okay, once it came into it, it printed a double bottom there before prices kind of rallied its way up into the US session there. So that's, as I said, we're waiting for. You've got the context of understanding this was the Asian session. Then once it gets out of there, okay, it basically looking for the pattern and then the trade, and the trade even up to the previous day's high would have been enough for many traders. But it just so happens that it's carried on, but you don't know that, all right? When you're putting the trade on, you don't know how far it'll go. Okay, so we can work with that. Okay, ladies and gentlemen, so unfortunately we've run out a little bit of time. They've overrun a little bit, so I apologize, but as always, it's because I'm just trying to cram in as much as I possibly can week on week, just to give you as much information as you can to take away. I hope that's just giving you just another little layer, just another little level of what we're talking about when we look to combine price action and intraday trading. As I said, I'll do probably about another 3 sessions over the next couple of months as part of the sessions, okay, and just add on. So as I said, there was some takeaways. There's a bit of homework. Take that on board, take them away. Okay, I always like to give students homework, but that's the way you get better. You take it away, you do it for the next few weeks, and you just practice, and you get better and better at it, trade after trade after trade. So with that in mind, it just remains for me to say that I wish you the best of success in your own trading, ladies and gentlemen. I hope you have a fabulous trading week. Remember, the next session is next Wednesday, London 2 p.m. time. We'll focus a bit on risk management, okay, which is crucially important to all traders. And so in the meantime, ladies and gentlemen, have a great week, trade well, and I'll speak to you soon. Cheers.